So, Brian, are there tax efficient investments other than retirement accounts?
Yeah, I mean, one of them that haven't had a lot of interest in the last few years just because interest rates have been so low, but municipal bonds. Now, municipal bonds,
I've heard about municipal bonds, and I do not know what that is.
yeah, so there's state tax-free ones, and then there's federal tax-free ones, federally exempt bonds. The reason you don't hear about them because the interest rates they're safer, right? Because who's backing them? Well, it's the city, it's the county, it's the state, it's the
municipality,
the feds, right? Yeah. And so if they're a government, they are a lot more financially secure than a corporation, right? You would think. And so the idea is that because of that, you're getting more safety than you get lower return, right? But you get 3-4% depending on the bond.
It's not terrible.
No, it's better than a stick in the eye. But it's if you're highly, your income is, $600,000 a year, $700,000. You're just making a lot of money. You're a very conservative investor. It may make sense because you're actually, let's say you are earning 3% yield, and if you're paying 40% in tax, it's actually better than that, right? Because you're earning 1.2% higher because of the tax savings. Does that make sense?
Mm-hmm.
So, essentially, if you're earning 3, you really earn 4.2. But the problem is right now, I mean, the interest rates have risen on everything. We've got money at that we manage at Fidelity, at Charles Schwab. They're paying 4.25%, 4.5%. That's money market funds, right? It's interest rates have risen. So holding on to a bond for a long time to earn 3-4%. But what the mistake I've seen, we saw this with a farmer that had an outside business, and they were losing money on the farm, right? So they really weren't paying a lot of taxes, and their broker had them in muni bonds. And I'm going, do you know what these are? She's like, yeah, those are muni bonds. They're tax-free. I'm like, you don't pay any tax. You have your business loss over here. You got your farm loss over here because this was a new business, right? And the farm was always losing money.
Yeah.
And you could earn in a corporate bond, you could probably get a higher rate of return because you're not paying any tax. It only helps somebody, professionals, doctors, lawyers, or somebody that's a very high income earner, business owner maybe that's doing well. Then it makes sense. So another thing, 1031 exchange.
You talk about this a lot. Yeah.
I do, because what's frustrating? I've literally talked to 2 commercial real estate brokers. Not in our small town. They were actually in different locations, but they really didn't fully understand how a 1031 worked and what's available, right? You can do reverse 1031 exchanges. You can do 1031 exchanges. You can go up in property, right? You don't have to buy the same exact dollar amount, right? If you sold a $300,000, you're going to buy $500,000, you can do that, right? And you can get a loan on that new property and get more deductions, and you can get more depreciation. We're recommending 1031 exchanges a lot when, like, we've got a client that came in last year. He said, I've been listening to your show for a while, and you talk about real estate sometimes. I like that. I need help because I'm doing it all on my own. And they were DIY. Everything except their taxes, which is very typical with real estate investors. Think, I don't need anybody. I'm pretty smart, right?
Yeah.
I've amassed this net worth of almost $10 million, and why do I need anybody else, right? I'm intelligent, so I can figure it out. And I sat there and I said, you're doing good. A lot of these properties are 20, 25 years old, 30 years old. And I can tell based on the depreciation that's coming off of them, very little. Like this one's almost depreciated at all. You're not getting the benefit of real estate. So my recommendation is, like, let's sell the ones that have, you've held the longest. Let's clean them up so you can get the top dollar. First of all, I don't know if these are dumps or not, but let's clean them up, put a little money into them, sell them. And then we can go buy other properties. And maybe instead of running all over town because you own 25, 30 properties, let's go and get one apartment building.
One bigger one.
One location.
Let's take 10 smaller ones and get one big one.
Right. Yeah. And actually, usually the cash flow actually increases there. We can do a cost segregation study on the building, which is a way to accelerate the depreciation. So you will get more cash flow, but it's not going to look like that on the IRS, because right now you're making money. I mean, the income was great, but he's paying taxes on it. And it's like, we can still get the same or more cash flow if you do these next steps. And of course, people don't like change, right? So it's like, oh, that was a lot, Brian. I don't want to do anything.
Right.
But when we model it out, it's like, okay, more money, less taxes, and more growth in my real estate portfolio. And the thing is, he's like, well, why are you recommending all this? I mean, that's part of the planning fee that you're paying to us. It's not just about your 401k or your IRA, you know, and they didn't have 401, excuse me, their IRAs and their Roths, which is kind of why they had come to me. They would, we want to convert a Roth. We want tax planning strategy. We want that. He had no idea it was going to, you know, give him advice on his real estate, but that's part of his net worth. It's more than half. It's ignoring a big portion of their net worth.
I get the feeling that do a lot of your clients who are getting ready to retire have real estate that they need to dump off?
I don't
And
know.
when I say dump off, I mean that they don't want to manage anymore and they need to sell. And
I don't need to. I think it's a personal preference. You do make more money if, you know, most of the time, I shouldn't say all the time, but most of the time you make more money when you're managing yourself. The problem is when we've had, you know, professionals analyze some of our clients, you know, real estate holdings, the biggest issue is that they're not charging enough rent and they're not getting the top dollar for their they're losing out
because they haven't done upgrades, or just because they're not knowledgeable, or
yeah.
and is this price per square foot type situation?
Yeah, I think a lot of it's either they're just not charged enough. Sometimes like, well, they're pretty good people, and you know they've been there a long time. They're nice.
Got to know them. We're friends.
Yeah,
We're friendly.
But it's a business.
Yeah.
It's and so that's where there's opportunity though when somebody else is buying and walking in, so you can then, you know, clean it up, go ahead and charge the right rent. But no, I mean that's another. And 1031 exchange just is selling a property, but just to buy property, you know, real estate can be a great tax advantage off your W-2 income. There's W-2ers are going, Brian, we had these doctors that came in and they're friends, and they heard me on the radio and they wanted to hear what I had to say for them. And I'm like, well, you know what? You work for a company, and besides your 401k, there's not much you can do except you got to create a business, which is what? A real estate investment firm, or you could start something else. And they got together and came back, yeah, we like real estate. We're going to do this. And so we helped them, you know, like, here's your partnership. And we got the attorney that set up the agreement, and they started buying real estate, right? And now their taxes are being reduced by, you know, 10 to 15 grand a year a piece. And they're also building their wealth outside of just the stock market and the real, you know.
And you helped him set it up.
Oh, we helped guide them through the whole step. And it's a lot, because you can't just say, oh, go buy some real estate. It's a real good deal. It's overwhelming to someone that's never done it before, right?
Yeah.
It's where do I start?
Do your homework.
And there's a million resources online. I mean, you can get overwhelmed. You could buy books, you know, and all of that. And a lot of them are fluff because they don't want to give you the specifics, right? And they don't know your situation either. They don't know your area, right? They don't know.
That's the thing, man. That's a lot of work. That's a lot of homework. You got to know cap rates and all that kind of stuff, right?
It is. Yeah, you got to be an expert on everything.
What's a good cap rate right now?
Well, it depends on the property, depends on what kind of sector it's in, right?
Yeah.
So, are you talking about, you know, residential? You're talking about multifamily? Depends on the area.
What's a good rent? $15 a square foot, $18 a square foot.
Depends if you're in Northern Virginia.
There's always a variable.
I've got a client in outside of DC, and he's getting. You should see this little house. He's got a rental. It's worth $750 grand. It's just it's a little teeny house. I mean, I think he's getting what is it, $3,500 or $4,000 a month or something. His cap rate actually is pretty low if I remember the math, but you know, he's like, well, these people. He drops the he puts an ad out like when one of the tenant leaves, and he literally has them like the next day
lined up, ready to go.
Well, because it's. I mean, look at the area. All our money goes to Northern Virginia and Maryland, right? Everything we have. So there's tons of jobs there, right? And people are moving there all the time for all the government jobs.
What do you think about this? How about you and I roommate? You'd have to put up with my wife too. And we'll Airbnb my house.
Yeah, you could Airbnb your house. A lot of people are doing that.
What if we could Airbnb like the basement and then the main floor and then the upper level?
You could.
3 different levels.
Mm-hmm.
It could be like what do you call those things overseas?
I don't
A
know.
hostel?
Hostel.
Is that what it's called? A brothel? No, not a brothel.
Hostel. I don't
Never
know.
mind.
I have no idea what you're talking about right now.
Like a bed and breakfast type thing. We could do that.
So there's also one other thing we didn't talk about on this what is it, U.S. News, that brought up these tax efficient investments other than retirement accounts. You don't have to just put in your 401k.
Yeah.
Qualified opportunity zones. These are property locations, usually neighborhoods or portions of neighborhoods deemed underdeveloped or blighted. And basically capital gain tax incentives, right? So you basically if you sold a property, you'd have to pay the tax in 2026, but you get 10 years of capital gains tax free in one of these. And you actually, I've talked to a couple clients about this. You could actually create your own qualified opportunity zone. It doesn't have to be a specific property that's already set up. I mean, that's a lot of work. You better have a pretty high end, property that you're going to do. But there's a lot of government incentives because they're trying to boost the economy, right? So just got to look at all the different tax strategies that are outside of just your retirement account.
Got it. Municipal bonds, 1031 exchange, qualified opportunity zones, if I'm hearing right. You got questions about those things? 866-2-PLAN-4, 866-TO-PLAN, and the number 4, the number 2, Integrity Financial Planning.